because y'all going to need to look at this 2 or 3 times, unless you invented income tax. And if you invented income tax, then you don't need it. All right, so first of all, I want you to write down, you don't have to write this down, but I want you to look at it. Your gross income. Your gross income is what your employer says they're going to pay you. Okay? Or it's what you bring home, not what you bring home, but what your check says. Or your check before your check, or whatever, your payroll. Then you got to minus some things. What you bring home is called your net income. That's what's on the paycheck. So if you make $1,000 a month, but your check is $800 a month, your gross income is $1,000 a month, your net income is $800 a month. And when I'm using these numbers, I'm just using round numbers, okay? So I don't need somebody in the back of the room going, oh, God, you don't make that much money. Yeah. I'm making round numbers, okay? All right. So your gross income, and you're going to minus your adjustments, and that's going to equal basically your net income. Now, your net income, you're going to add some things to your net income. What if you rent out an apartment on your property, like a guest house or a garage, and you turned it into an apartment, and that money comes in as rent? Is that income or is that expense? It's income. Anything that comes into your hand, into your pocketbook, that is income. Whether it's dividends off of stocks, whether it's rent, as somebody, you're renting somebody a station wagon in the backyard and they're sleeping in it, all right? I had a guy call me this weekend. He's got a piece of property across from our farm, across the creek from our farm, and he's scared somebody's going to mess with his stuff over there, so he wants to put in a camera that feeds into the internet. Well, he don't have any internet, so he wants to put an extender on my house and extend my, and it's password protected, and extend it to his little shed so he can put a camera up over there. And I said, okay, I don't care. Well, he was wanting to give me $25 a month. I said, no, that's no big deal. And because I told him, I said, put up a couple of cameras on my farm. I said, do that. He said, okay. So anyway, that would be an income. $25 a month, that would be income. Anything that comes to you is called income. Now, what's the loophole there? Documented. Yeah, documented. If you give me $25 cash every month, that's what? That's not documented. That's why people want cash all the time, because they don't have to run it through Uncle Sam. But what's documented? Anything that has a what? A check stub. Anything that's stubbed, anything that's written down record, that is income that has to be taxed. Capiche? Remember that. Now, what about savings accounts? Okay? Savings accounts. If you give to a savings account, that is deducted. Okay? And we're going to get into that, but we're not going to get into it right now. That's deductions right here. So you don't have to write this down, but just think about the way this is going. Okay? You're going to deduct, you're going to add, and whatever you come up with at that is called taxable income. Taxable income. And we'll go through it in just a second. Here we go. Karen, and you want to write this down, because you better write down every step on this one. Because I'm going to be honest with you, this is probably going to be the most complicated section there is for you to grasp hold of. Why? Because the math is hard, or because you've never seen it? Probably because you've never seen it. And there's a lot of people that's never seen it. Now, I do realize some of y'all invented income tax. I know that. But there's some of us that haven't, that didn't invent income tax. Some of us invented the space shuttle, like my ex-mother-in-law. She invented the space shuttle and computers. But anyway, Karen earned wages of that's my ex-wife's name, Karen. Karen earned wages of $38,600. Received $750 in interest. Interest off her savings account. That is income. That's like dividends. Interest off of your savings account is going into your bank account. How many of you have seen a dividend in your bank account of 39 cents or a dividend of your bank account of 1 cent? You ever seen that before? It's always a plus. Why is it a plus? Because they're paying you money. They're putting it in. If it goes into your account, It is income. I only have to say that 5,000 times before y'all get it. That's why people fail accounting. People fail accounting not because of the math. People fail accounting because of the definitions and terminology. They don't know when something is added and when something is subtracted based on this definition. That's why people fail accounting. Okay, she contributed $1,200 to a tax-deferred retirement plan. Okay, what did that do? That's going out of her pocket, right? Okay, that's not income. That's expense because it's going out of your pocket. But it's a good thing because it's deducted from your income, so you pay less taxes because the taxable income goes down. She was entitled to a personal exemption of $4,050 and a deduction of $6,350. Okay. Now, this paragraph, this question is showing you what to add and what to subtract. Find her gross income, adjusted gross income, and taxable income. Finish writing it down. I want you to highlight those last three things. Gross income, adjusted gross income, and taxable income. And I want you to get used to those definitions. Get used to those words. Because there's going to be test questions that are going to ask you for the different ones, and you're going to write down the wrong thing and get mad. And blame it on who? Me. Well, yeah. Hillary's going to run again, they say. She's a damn idiot. She rigged the Democratic Party against Bernie, poor old Bernie. He actually had some good ideas. Except for free health care and free, because that's impossible. You can't have that. Anyway, he actually had some good ideas. He had the same ideas that Trump has, if you noticed, about the elite. But anyway, she rigged, her and that woman from Florida, they rigged the Democratic Party and still couldn't win the election. And she thinks she's going to win the election now? No, I don't think any candidate has run 3 times. Joe Biden ran twice. Ted Kennedy ran twice. There was a couple others ran twice. I don't think anybody's ever ran 3 times. I may be wrong. Huh?
Shirley ran twice?
Yeah. She got beat twice. But Jeff Flake is going to run, so some of these politicians are unrealistic. Jeff Flake is Republican senator from, is it Arizona? He's an idiot. And he thinks he's going to run against Trump. He might be able to beat out, what's his name, Kasich up in Ohio, that might get, John Kasich, he might get 1%. He may beat him. Okay, so what are you going to do? Well, the interest you're going to add. So take your calculator and add 38.6 plus 750. Now, why is it added? Somebody tell me why it's added. I need to go over this over and over and over.
It's income.
It's income because what? It's interest from your savings account. Interest is dividends. Write down interest and dividends. Interest and dividends and rent. Not rent on your apartment, but rent coming in from your station wagon that you're renting out in the backyard. You think I'm kidding, but I actually know somebody who stayed in a camper in the backyard before. One of them campers that lifts up, little trailer that lifts up. Yeah, they got them, yeah. Yeah, this was not a parent. This was somebody that needed a house. He would have been homeless. But the guy rented it to him. I wouldn't have rented it to him. I would have said, look, you can hang out, took a couple of 3 weeks to get your feet on you, and then I'll start charging you. But don't start renting them from day one. Give him a chance.
Hey, you gotta get that bread too.
I don't believe in kicking a man when the ox is in the ditch. Some of y'all have no idea what the ox is in the ditch means. Anybody know what that means?
guess it's referring to that's his word.
When you're in bad times, bad financial times, the ox is in the ditch. Forget it. Your mother and father. It's your parents' fault.
Is it dead?
Huh?
Is it dead?
Yeah, it's dead. Now, if you pay, just forget it. It's your parents' fault. Well, if you pay out money to what? To a tax-deferred retirement, you are taking that out, so you're going to subtract it. I'm going to go ahead and hit the next button so you can see. There's what you should have got, 39,350. That's gross income. Why is it gross? Because that's what you've got coming in. All right, is anything taken out of it? No. That's why it's called gross. Net is when you take stuff out of it. That's why your check is net. What comes out of your check? Taxes and FICA and everything, and that goes to what you owe the government. We're going to get to that at the end of the income tax. There's going to be subtracted. There's the $1,200. It's going to be subtracted. There. Minus $1,200. I think they got their commas mixed up. Look at what they got down there. Am I reading that right?
Yeah, they just got extra numbers.
39,000 minus 1,000 is 387,150. I think somebody messed that up. Somebody check that and see what the actual answer is.
38,150.
I'm sorry, what?
38,150.
Yeah, they got an extra 7 in there. Oh well, check. Make sure you make that note. And then what? Subtract the deductions. Now, in later, you're going to see about a tax credit. That's when you buy one of these electric cars. It's a death trap. What do you call them cars that are about this big?
Smart car.
Yeah. When you buy one of them death traps, you get like $2,000 tax credit. But that does not come off of this. It's going to come off of something else here in just a minute, okay? We're going to talk about that. Now, what is exemptions and deductions? Well, if you're one of these people that keep up with receipts, that's where it comes from. But I don't do that. I don't know about y'all, but I don't do that. I just take the standard deduction and the standard exemption, which is usually around $10,000, something like that. What does that stand for? Your gas, your utilities, that kind of stuff. In other words, they just kind of lump it into. Now, some people, like I say, keep. You know anybody that keeps receipts on every single thing? I used to know somebody that it was a couple, and the girl, the wife, would spend money. I mean, not spend it frivolously, but she would like buy snacks for the kids while they were going to soccer or whatever, and she had to write everything in a little notebook, everything she bought, and give it to her husband, because he kept a total of what they spent and da-da-da-da-da.
My dad keeps all his receipts, but I talked enough shit to him, so now he stopped.
She did it
I was
because
like,
she had to.
wait, I was like, why do you do this? He was like, it's a habit.
Well, see, now you don't have to, because if you do your debit card, and see, my mother is like almost 80 years old, and she just cannot conceive this. I do her taxes now. I don't do her taxes. I get everything ready for the farm, and see, I buy stuff at one place. So I buy all the diesel from one place. I buy all the feed from one place. I buy all my supplies from one place, Tractor Supply. So when Tractor Supply sends me a receipt over the whole year, boom, I just put it in the thing for taxes. And I take my bank account and I transfer it to an Excel spreadsheet, and I sort by all the companies, and Shell Station, that's diesel, and I put that on and I put Tractor Supply, I put da-da-da, and all the different places. I only buy like 5 different places. White Jones is out here on 24. It's a hardware store. I get stuff there because we have a business account there, and I send it, and I put that in the. So now the businesses pretty much do it for you, and you don't have to keep up with stuff like that. So really, the days of keeping receipts in a shoebox, since you got your debit card. Now, what if you don't use a debit card, you don't use a credit card, and then you do 100% cash? Then you need to keep your receipts. But there's no sense in keeping your receipts now, really, unless you just do 100% cash. Now, that right there, the $27,000 is taxable income. Now, is that good that it goes down? Yes. The government is giving you breaks based on what you spend. That's why instead of instead of paying, what was the original? Instead of paying on 38,600, you're just going to be paying income taxes on what? 27,750. Now, here's where it starts to get a little complicated. All right, there's an income tax bracket, I think should be on the next. Okay, we got to do single. Okay, this is not a big deal. You know what you are. I'm single. Okay, I'm not married, filing jointly. I think most of y'all can figure this out. Okay, married, filing separately is when you get these people that have two big jobs. Like one of them makes $75,000 a year, the other one makes $150,000. It may be better for them to do separate or a choice. It's not a real big deal. However, head of household, we won't even go there. Okay. But anyway, unmarried and paying more than half that would be me. Okay. Okay, whatever. I do married filing separately. No, single. I do single. Sorry. Okay, exemptions and deductions. So we've done that. We talked about that. That's usually a standard. I'm not going over this. Okay, I want to get to the part that gets a little bit confusing. Okay. Hold on just a second. Okay, blah, blah, blah. You plug in all that. You get your taxable income. There we go. All right, now take a picture of this or write it down. Be best to, just make a note of it. It's called marginal tax rates. Now, this has changed the last year with the tax cut. Okay? I don't know. We'll pull it up here in just a second. But this has changed. I think there's only like 7. Let's see, 1, 2, 3, 4, 5, 6, 7. I think there's 5 now. Okay? Look how much, if you hit it rich, let's say you go out to your house and you dig a hole and you hit OIL. Okay? And you hit OIL and there's a big lake of OIL under your house. Okay? And you put all that money, it's basically Beverly Hillbillies. All right? And you make $10 million. Then 40% of that's going to Uncle Sam. 39.6, 40%. So some of y'all don't realize that for every dollar you make, 40 cents goes to the United States government. Now, do you want that to go up or down? Okay, more jobs, more IRS, more DHEC, more regulations means more employees. More employees means more pay. So that for the pay, the taxes has to go what? Up. It's a cycle. All right? The more government jobs there are, the more pay is needed. The taxes go what? Up. There's no fighting. Okay? You can't have government jobs, you can't have government regulations, and not have the employees go up and the taxes go up. You got to have it. Okay? So, 40%. So what would cause that to go down? Less regulations, less government jobs. Pretty much it. But some of these jobs have gotten so huge, some of these organizations have gotten so huge, we're not talking about 2,000 or 3,000 employees, we're talking about what? 30,000 employees. The government has gone crazy, okay? The government is too big, but that's why you're giving 40% of every dollar. If you strike it rich or if you inherit $5 million, you're going to be paying 40%. 40 cents on the dollar. Now you tell me that's fair. I don't think it is, but that's just my opinion. Now this is where it gets complicated because they don't want to take it all from you at one point. So what do you have to do? You have to subtract each little bit. All right, so let's go back and see how much this guy was doing. What was it? What was the total? 27 what? Okay, 27,750. Write that down. Hold on, I'm getting there. All right, let's say single. Let's just keep it simple. Okay, single. 27,750. Let me get my handy dandy. Where's the whiteboard? Where's the dang whiteboard? Oh, I got to set this. Hold on just a second. Use presenter view, primary. Now. Okay, still not there. Conspiracy. The things I do for y'all. There we go. And pull that back up. There we go. And there. There we go. Now we're cooking with OIL. Change that to black. How much was it? 27,750? 27,750 is going to fall where? Right here. 27,750. Okay, so how do you calculate that? Well, first of all, you take this out of it. And that's at what? 10%. So, 27,750 is going to be broken up into 10% at 93.25 and 15% at what? Well, you got to take 37,950. You got to take 27,750 and subtract what? 93.25. Why? Because you don't want to pay on 93.25 how many times? Twice. It's overlapping. So you got to subtract it. You got to do that with each level. That's where it gets complicated. It's not complicated. It's just hard for people to understand because they've never done it before. All right. So somebody take 27,750 and subtract 93.25. What do you get?
18,425.
I'm sorry, what?
18,425.
Okay, now, I'm going to do the first one for you because I'm smart. $932.50. I did that in my head. All right, now you do the second part. Multiply 18,425 times 0.15. What do you get?
2,763.75.
And add those two together. $36.97.25.
36,96.25.
36.96.25. You owe Uncle Sam $3,700. Now, how do you pay that? Well, all that stuff that comes out of your paycheck, where does it go to? It goes to paying what? This off. That's where the dependents come from. See, I still claim 3 dependents. Why? Because I like to have government owing me. I don't like to owe the government. Okay? So I have those 3 dependents, my son, my daughter, and me. I claim 3 dependents. So that way they take more out of my paycheck. So that way at income tax time, I should be getting a check what? Back. Now, if I close 0 dependents, that means they don't take a lot out of my paycheck and I get a bigger paycheck. But that also means that I'm going to what? Uncle Sam. I'm going to owe Uncle Sam money. So it depends on what you want. Okay? I don't like owing people, so I take out a little bit more. And plus, you people that don't manage money very well, that's me. I want to take it out when I have to. That's why I have my account set up on draft. I'm not very good. I'm a spender because I spend money, okay? You either have you're one of two people. You're a spender or you're a miser. One of the two. There's no in between. It's like black and white. There's no gray area. You're either a spender or a miser. Which one are you?
Spender.
I'm a spender.
How do they know how many dependents you have?
You put it down on your
How do they find out if they're more right now?
Well, that's what audit's for. Actually, most people are not going to. It'd be like this: if you're 18 years old and say you have 21 kids, it's going to pop a flag, and the flag's going to go up, and the IRS is going to come see you and see if you got 21 kids.
Well, my brother did it, and he's having to pay back now, but I don't know how many people he put on there.
Well, honestly, a lot of people think that it's kind of like the algorithms on Facebook. They have algorithms at the Internal Revenue Service. They got programmers there, and when something comes through and it doesn't calculate, flag goes up. Flag goes up. IRS shows up at your door. My father had been in business for over the same age I is. Well, he died 4 years ago, so I'm 51 minus 47 years. He was in business for 47 years. Never had audit. I've been doing taxes since I was 18, never had audit. Because you follow what? Wow, what concept? Follow the rules, follow the law. If you do those two things, what? Nothing will happen.
I don't know. I don't know what's up.
Okay, give me a situation where a person follows the rules and follows the law and doesn't get something happens.
I pulled up to a roadblock.
You pulled up to a what?
Pulled up to a roadblock, right?
Yeah.
Traffic, whatever you want to call it. Pulled up, said roll your window down. I was like, all right, my window doesn't work. I'm gonna open the door, hang my stuff. Before I can even do that, he
Okay.
takes me out of the car.
All right. Well, first of all, okay, and I understand that. But I do understand that right now, I don't know how long ago was that? Last 5 years.
Last year.
The last 5 years, cops are like on eggshells, and I don't blame them. I don't blame them. They're on eggshells, and I'm not defending them. I'm just saying that they're on eggshells, so they have to go with. I guarantee you, if they pulled me over with my truck, well, they probably wouldn't because mine's a redneck truck. But if they pulled me over and my tinted windows, I guarantee you they're going to be cautious because they don't know what I'm going to pull out when they don't.
It's just, I mean, that sounds good. It's just, shit happened to you before. I went to jail for that. Like, I went to jail that night.
You went to jail
Yeah,
for what?
For a DUI that I didn't have anything. I didn't have anything, didn't do anything. Walked my line, stood my thing, did everything, went to jail.
Now, have you been drinking?
No, nothing.
What did you prove your innocence?
Did you blow?
Yeah, did all this. Went to jail. Got dropped. Case got dropped before I ever went to court because, blood test showed I hadn't.
You should have sued.
Went to jail for this stuff. So, I mean.
You should have sued.
Did you get an attitude?
That's no.
You didn't?
No, because I know better now.
I'm black, dude. I know.
No. Have you watched Live PD?
I have.
Those people are stupid.
Well, I'm smarter than that.
Okay, good. Okay. They made Hartwell, Franklin County. Hartwell's in Franklin, right? It's not. Okay, so Franklin's even worse. Franklin Hartwell makes Anderson look like a big city. Am I right?
Yes, no. I've never been pulled over in Anderson, not once.
Yeah. Yeah, I would be. Yeah, I can empathize with you on that.
Yeah, I don't want to like.
I've got two Marine buddies. That were brothers,
Yeah.
Evans brothers, and I think they worked when they came out of the Marine Corps, they were, what do you call them, law enforcement? They made me cringe, some of the stuff they said. They made me cringe. And I'm pretty conservative, but they made me cringe, some of the stuff that came out of their mouth. So, and you probably got stopped by one of them, I don't know. But anyway.
It'd be like that. It happens. I just want to say there's just times like you do everything you're supposed to do and you still do it.
Put your sticker on the back, say I love Trump, and you'll be all right. That's what my sticker says. My truck says I got Hillary for prison, and then I got Trump, 100% something for Trump. So if I get pulled over, and then get you a law enforcement sticker and put that on the back too.
I back the board.
Oh. Hubert, listen to this. I'm in Commerce, Georgia this weekend on my way to Atlanta. And this dude's wearing a shirt. It's got a picture of Hillary that says "Do not resuscitate."
Oh my God, that's pretty bad.
And he was telling me about his whole other collection of anti-Hillary shirts. He was like, he had one of it was either Trump. I think it was Trump on a motorcycle, and he had the shirt on that said.
Yeah, I've seen that one.
This is no lie.
All right, I don't mean to change the subject. Somebody will complain. So, any questions on this? Now, where does the problem come in? Well, we only did 2 levels. What if you make 174,000? You make 174,000, you got to go 4 levels, and that's where it gets a little bit complicated. So we're going to do some today. We're just going into it a little bit, but when y'all come back Wednesday, we're going to actually do some problems that have 3 or 4 levels, and you're going to actually see. Now, what's the difference? Well, the difference is, if you're married, you're going to pull out a little bit more. There are a little bit of differences. See, 28% is a little bit different, but the 33% is not. Okay, so and then you got over here head of household. Okay, they take into effect. Now, somebody told me that my alimony and child support is not going to help me with this tax cut. I don't know. I got to find that out. I don't know. I'm just going to turn it in like I always do, and if I need to adjust it, I'll adjust it. But I don't know. I haven't read so we need to pull that up and look at it. Not my part. I'm talking about the scale right here. This is called the marginal tax rates. This is what the politicians talk about when they say we need to go from 7 to 5. Okay, I think we're at 5 now. This is 7. 1, 2, 3, 4, 5, 6, 7. I think they took 2 of these out. In fact, we'll pull that up and look right quick. What year is it?
2018.
Okay, so 2018. Let's go to Google. 2018. Oh my Lord. Hold on a second. There we go. 2018 tax rate. There they are. 3 more rows. Hold on. This says Forbes. I'd like to get it from IRS. I hope I can go here and it will go right to it. No, it's not. There they are. Okay, we're going to go for single since we worked. 1, 2, 3, 4, 5, 6. They still got it at 7. They said they were modifying it. 1, 2, 3, 4, 5, 6. I think the numbers have changed. See if the numbers have changed. I can't. Hold on a second. I'm going to pull up the 10%, 93.25. 10%.
They said above it that
Yeah.
still 7 brackets because the rates are just curious.
The rate, yeah, the rates are different. Okay, that's it. So it has changed. And now the deductions have changed also. So we'll do one with that later, but we're not going to go into it right now. But anyway, let me pull this up and we'll go from there. Now, a tax credit will come off of your taxable income. So let's say you bought a death car, okay? And I saw one of them things riding around out there on the farm. And I'm like, this does not belong here, okay? The little death car riding around, things big as my daggum tire on a tractor, okay? And it's about this big, and it's going around the hill. All right, let's say you get a $2,000 tax credit. Well, that will come off of what was that, 30, what was the taxable income?
3696.
Okay, so you would take 2,000 off of that 3696. Now, a lot of people say, what's the difference? Well, that's just like giving you $2,000 in your pocket. When you take it off your taxable income, that's like money in your pocket. Capiche? Because they're taking off $2,000 off your taxable income. So instead of owing for $3,960, you only owe $1,960, which means that you're going to get more money back because of that $2,000 tax credit. You see what I'm saying? So that's what a tax credit. Remember, put down tax credit at the very end. The very end. Tax credit is not a deduction. That's what you're going to get confused on the test. You're going to think they're going to give you a tax credit and you're going to take it off and you don't. You don't take it off as a deduction. You take it off your taxable income. Suppose you are in 28% tax bracket. How much does a $1,000 tax credit save you? How much does a $1,000 charitable contribution, which is tax deductible, save you? The $1,000 charitable contribution is taken off at the end or the beginning? The beginning, because it is a contribution. The tax credit is taken off at the very end. The tax credit is like money in your pocket. All right? I don't know if they're going to go through the tax rates or not. I'm looking to see however Okay, they went through the whole thing, and we're not going to do that for right now. Drew is in the 15% marginal tax bracket. Marion is in 35% marginal tax bracket. They each itemize their deductions. They each donate $5,000. Compare their true costs for charitable contributions. Okay, they're just multiplying it times 15 and 35. That's what they're doing. We'll do all that later. I'm just looking to see what else is being taught. Okay, write this down. This is important. FICA. FICA applies to the following: income from wages, including tips, and self-employment. That's what comes out of your paycheck. That's what goes toward what you owe at the end of the year. So let's say you do 12 paychecks. Let's say you get paid by the month. And each one of those, $100 comes out. So how much is that at the end of the year? $1,200 you've paid to Uncle Sam. Let's say you owe him $800 in taxes. What's going to happen? Did y'all understand what I said?
Can you repeat it?
I didn't understand what y'all said. Somebody said, Okay, I'm going to restate the question. All right? $100 each check. You get 12 checks. You're giving Uncle Sam $1,200. You owe Uncle Sam $800 taxes. What's going to happen? You get $400 back. Why? Because the number of the FICA point, the FICA dollars is above what you owe Uncle Sam. So if the FICA dollars that's come out of your paycheck is more than what you owe Uncle Sam, you're going to get money back. If it's not enough, you're going to what? You're going to have to owe. Like Al Sharpton. I think he owes like $4 million to the government. Did y'all hear about the Las Vegas pimp that is a member of Congress and he's dead? Did y'all hear about that?
No.
You did? Yeah. On the what was it called? The Mustang Ranch? Or one of the brothels in California or somewhere? And he died last month, but he won the election for House of Representatives. Yeah. So now they're going to have to appoint somebody because he's dead. Anyway.
So technically, everywhere I work that gets tips isn't reported. So that's technically illegal?
Technically, but they ain't going to bust. The IRS is not going to bust an 18-year-old working in high school or going to college. They're not going to do that. But a single housewife or a single or a married or married mother or whatever that's got a job, making tips, that's going to be a flag if she doesn't, They can catch you. But I think they're very.
Well, they report card tips, but not cash.
Yeah. Cash, I don't think they should.
Yeah, no.
Okay. So FICA does not apply to the following: income from interest, income from dividends. Remember, dividends, interest, that is what? That's income, but it's not. FICA does not apply to that. FICA only applies if it comes out of your what? Paycheck. Exactly. And you need to write that down. We're going to spend today and Wednesday going over nothing but these definitions over and over and over, because that's why people don't understand. They don't understand what comes out and what goes in.
Can you go back?
No.
Yeah, I did not see that.
No. There you go. Okay, I'll give you another example. I have a check. I have what's it called? Drought insurance on my pastures. Okay, so I got a check for my drought insurance about $450, $500. I asked my accountant. I said, "Is that I don't have an accountant? Somebody does my taxes. I can't stand when I have an accountant. I can't stand when the person that does my taxes." I asked him. I said, "Do I need to turn this in?" No, because that's an insurance payment. So FICA does not come out of an insurance payment. You see what I'm saying? But if it was a check written from John Smith for me selling them hay, then that would be part income. That would be income because it's a check and it would be income. Now it's not stub. He don't say, but it would be income because it is documented, like he said. Okay, so you have to. That's why it's very important. If you have no idea what you're doing, that's why I do it. Hire somebody to do your taxes. Okay, because it's really not worth it. If you ever go through an audit, I've heard horror stories of people going through an audit. And remember, if you do everything right, if you do everything legally, you don't have anything to worry about. I don't. If I have an audit, I wouldn't even worry about it because I haven't done anything wrong. I don't think I have. If I have, it's not unintentional. Okay? Okay, we're going to do this Wednesday. I'm not going to do that yet, but you multiply it by 1.5 or 7.65. There it is. Write that down. That's the magic number, 7.65%. So, if you have a check for $200, let's say you get a check for $200. Let's make it $100. Okay? Then you multiply by let's say that's 0.0765. You multiply that by $100 check. You move it 2 places to the right. It's going to be $7.65. So that's how much money is going to come out of your $100 check. A lot of people know that a lot of people work today that don't know it's 7.65%. That should be a dang test question on your exit exam in high school. If you had one. I don't know. Don't they have it? They don't have that anymore. They had it 1 or 2.
They have an exam you have to take like your sophomore year to graduate.
Okay.
They have it in my school, you have an A in the class and you don't have to take it.
You could be A in underwater firefighting and you still get, okay, I'm not going there. But anyway, that should be a question on the SAT, the ACT, or whatever. Every high school graduate should know that 8% is coming out of your paycheck going toward Uncle Sam, period. So if you make $100, $8 is going to Uncle Sam toward your income taxes. Now, if you have dependents, then that goes up, and you'd have to you'd have to look it up to see what it goes up to. But it goes up when you have dependents. And then you would take that off. 26,000. We got her tax bill. Okay, she's got exemptions up here. Okay, they do the exemptions, but they don't show you the thing, and that's why I don't like the slides. When we do the homework questions, it'll have the chart beside it, and you can look at the chart and you can actually see where it's coming from. So anyway, we'll do this Wednesday. We're gonna finish there. I'm not gonna do any more today. Okay? All right, y'all get out of here and have a good day. I'm not taking roll today. It's Veterans Day and I really don't want to be here, so.